All right, so let's dive into something pretty wild happening with Bitcoin right now. It's all about this concept of a supply shock, which sounds kind of like it's straight out of economics textbook, but it actually has some pretty major implications for Bitcoin's price. We're going to be looking at some in-depth analysis and data surrounding Bitcoin's price fluctuations early in 2025. And our main source today is an article from Cointelegraph. If you're into crypto, Cointelegraph, a leading voice in crypto news. The article is titled 2.5 M Bitcoin Left on Crypto Exchanges Signals Supply Shock. You ready to unpack this?
Absolutely. And I think what's really capturing everyone's attention is this idea that Bitcoin reserves on exchanges have plummeted to their lowest point in 3 years. We're talking just 2.5 million Bitcoins. Simply put, this means the number of Bitcoins readily available for people to buy has significantly shrunk.
Okay, so fewer Bitcoins available. That makes sense. But
Hmm.
what's the big deal? I mean, isn't Bitcoin supposed to be this digital gold, this safe haven asset? Why does the amount available on exchanges even matter?
That's a great question. And it gets to the heart of how Bitcoin's price is influenced. While it's often seen as digital gold, Bitcoin is also a traded asset. And just like with any other asset, the laws of supply and demand come into play. When the supply of something readily available for purchase shrinks, but the demand remains strong, you tend to see an increase in price.
So it's like if suddenly there were only a handful of those super rare sneakers everyone's trying to get their hands on, the price would probably go through the roof, right?
Exactly. Scarcity often drives up value, and we're seeing that play out in the Bitcoin market right now. Now, to add another layer to this, we also have the rising popularity of Bitcoin ETFs, or exchange-traded funds. These ETFs allow institutional investors to gain exposure to Bitcoin without directly owning it, and they've become a popular way for big players to enter the market.
Hold on. I'm still wrapping my head around ETFs. Can you break those down a bit more for me?
Sure, think of an ETF as a basket of assets that you can buy or sell in a stock exchange. In this case, a Bitcoin ETF holds Bitcoin, allowing investors to essentially buy shares of that basket instead of buying Bitcoin directly. This has made it easier for institutions like hedge funds and asset managers to get involved in Bitcoin. And they tend to hold their assets for longer periods. So not only do we have fewer Bitcoins available on exchanges, but a chunk of what's been purchased through these ETFs is also essentially locked away for the long haul.
That makes sense. So even if people want to buy Bitcoin, there's simply less available to go around. But I also remember reading that Bitcoin went through some pretty serious selling pressure recently, the biggest since that whole Three Arrows Capital collapse back in 2022. Did that not affect the price?
That's what's so interesting here. Despite that selling pressure, Bitcoin's price has remained remarkably resilient, holding strong above $95,000. This is where the analysis gets really fascinating, because it suggests a couple of things. First, there's strong institutional interest in Bitcoin. These larger investors aren't spooked by short-term price fluctuations and are likely viewing this dip as a buying opportunity.
So they're basically doubling down, betting that this supply shock will push the price even higher.
That's one interpretation. Analysts like Ryan Lee, the chief analyst at Bigot Research, are pointing to this resilience as a sign of seller exhaustion. Basically, the market might be shifting from a period of selling pressure to a period of buying pressure, as those who wanted to sell have already done so.
Okay, so $95,000 seems like a crucial line in the sand here. The Cointelegraph article even highlighted that maintaining this price level is critical for Bitcoin's continued upward momentum. But if we're talking about these big institutions driving demand, shouldn't we also look at what's happening with those Bitcoin ETFs?
You're absolutely right, and this is where we might need to pump the brakes a little. On the pure optimism, there's a bit of a counterpoint emerging. Recent data shows net negative outflows from U.S. spot Bitcoin ETFs.
Wait, so while some institutions are buying up Bitcoin, others are pulling out. That sounds like a mixed message.
It certainly adds a layer of complexity. Now, fluctuations in ETF flows aren't unusual, but it does raise the question, could these outflows potentially put downward pressure on Bitcoin's price? Despite the overall shrinking supply, this is where understanding the nuances of different types of Bitcoin ETFs becomes really important.
All right, I'm all ears. Break it down for me.
Well, you see, not all Bitcoin ETFs are created equal. They have different structures and mechanisms that can impact Bitcoin's price in different ways. For example, some ETFs hold Bitcoin directly, while others use derivatives or futures contracts. The reasons for these U.S. spot Bitcoin ETF outflows could be varied. It could be profit-taking by some investors, or it could be a shift in investment strategy due to concerns about regulation or market volatility.
So even though the overall supply of Bitcoin is shrinking, the way these institutions are choosing to interact with it through ETFs is changing. and that could have a significant impact on the price.
Precisely. And to complicate matters even further, there's another layer of risk to consider, something called liquidation risk, which is particularly relevant in the context of these leveraged long positions.
Okay, leverage long positions. That sounds a little intimidating. What exactly are we talking about here?
Now imagine this. You're bullish on Bitcoin, and you believe the price is going to go up. To amplify your potential profits, you decide to borrow funds to buy more Bitcoin than you could afford with your own capital. This is called leverage, and it can magnify your gains if the price goes up as you predicted.
So it's like a high risk, high reward strategy.
Exactly, but here's the catch. If the price of Bitcoin falls significantly, you could be forced to sell your Bitcoin at a loss to repay the borrowed funds. This is called liquidation. And if enough leveraged long positions get liquidated, it can create a cascade effect, pushing the price of Bitcoin down even further.
So it's like a domino effect. One liquidation triggers another, and suddenly you have a massive sell-off.
That's a great way to put it. And the data suggests that if Bitcoin's price were to drop below that crucial $95,000 mark, we could see over $1.52 billion worth of leveraged long positions liquidated. This highlights the inherent volatility and risk in the crypto market, where even small price movements can have amplified consequences for leveraged traders.
This is getting pretty complex. So we've got shrinking supply, strong demand from some institutions, but also these potential headwinds like ETF outflows, and the looming risk of liquidations if the price drops significantly.
A delicate balancing act, wouldn't you say? And that's what makes this deep dive so fascinating. We're peeling back the layers of this intricate system, trying to understand the forces that are shaping the future of Bitcoin.
Well, this definitely has my attention. What else is there to consider as we try to piece together what's going to happen to Bitcoin in 2025?
Well, let's shift our focus to the global stage for a moment, because we can't ignore the broader economic and geopolitical context. Remember that ongoing U.S.-China trade war we touched on earlier? Well, it's creating a lot of uncertainty in global markets, and those ripples can definitely reach the crypto world.
So how exactly do global events like that impact Bitcoin?
Well, imagine it this way. Bitcoin and cryptocurrencies in general are often seen as alternatives to traditional financial systems. So when there's global uncertainty, whether it's trade wars, political instability, or economic downturns, people might start looking for alternative places to store their wealth.
So they turn to Bitcoin as a kind of safe haven, like a digital gold rush during times of turmoil.
Precisely, we saw this happen back in 2022 during the early stages of the U.S.-China trade war, as well as during periods of heightened geopolitical tension. Bitcoin's price often spikes when traditional markets are experiencing volatility. It's like investors are seeking shelter from the storm, and Bitcoin, with its decentralized nature and limited supply, offers a perceived sense of security.
Interesting. So these global events can actually be a catalyst for Bitcoin's growth, even though they might seem unrelated at first glance.
Exactly. It's all interconnected now. I know we touched on some pretty optimistic price predictions for Bitcoin in 2025, with some analysts forecasting prices as high as $160,000 or even $180,000.
Yeah, those numbers definitely caught my eye, but to be honest, I'm always a bit skeptical of those kinds of predictions, especially in the crypto world, which can be so unpredictable.
I understand your skepticism, and it's wise to approach any price prediction with caution. Remember, these forecasts are based on various factors and assumptions, many of which can change rapidly. What's more valuable is to understand the underlying dynamics at play and to develop a framework for evaluating these predictions.
Okay, so let's try to break that down. We've got shrinking supply, strong institutional interest, but also potential headwinds like those ETF outflows and the risk of liquidations. And then we have this wildcard factor of global events that could either boost or hinder Bitcoin's price. How do we make sense of all this? Where does Bitcoin go from here?
Well, it's like trying to predict the weather. We can analyze the patterns, track the storms, and make educated guesses, but there's always an element of unpredictability, however. By understanding the factors at play, we can at least navigate the crypto waters with a bit more awareness.
So it's not about blindly following predictions, but about staying informed and understanding the forces driving the market.
Absolutely. Remember, knowledge is power, especially in a fast-moving market like crypto. So if you're trying to figure out how to approach Bitcoin in 2025, there are a few key things to keep in mind.
Okay, I'm ready to take notes. What should we be paying attention to?
First, keep an eye on those Bitcoin exchange reserves. Are they continuing to decline, or are we seeing a shift? This will give you an indication of the overall supply dynamics.
Got it. What else?
Second, pay close attention to those ETF flows. Are institutions continuing to pour money into Bitcoin, or are we seeing more outflows? This will give you a sense of institutional sentiment and how they're reacting to market conditions.
Makes sense. So monitor the supply and keep an eye on the big players. What else?
And of course, we can't forget about global events. Keep abreast of developments in the U.S.-China trade war, as well as any other geopolitical or economic events that could impact market sentiment. These events can have a ripple effect on all assets, including cryptocurrencies.
It's a lot to keep track of, but I'm starting to see the bigger picture here. It's not just about watching the price ticker. It's about understanding the forces driving those price movements, both within the crypto market and on the global stage.
Precisely. And that's what makes this space so fascinating. It's like a giant interconnected puzzle, and we're trying to put all the pieces together to see the bigger picture.
Well, I have to admit, this deep dive has been a bit of a roller coaster ride. We've gone from shrinking supplies and optimistic predictions to ETF outflows and potential liquidations, and then we added global events into the mix. It's a lot to digest.
It certainly is. But that's the nature of the crypto world. It's constantly evolving, and there's always something new to learn. And remember that unpredictability is also part of what makes it so exciting. It keeps us on our toes, challenges our assumptions, and pushes us to think differently about the future of finance.
You've got a point there. So where does this leave us? What's the takeaway for someone trying to navigate the crypto waters in 2025?
Well, the key is to approach it with a balanced perspective. Acknowledge the potential of Bitcoin, but also recognize the inherent risks.
Right. Don't put all your eggs in one basket, so to speak.
Exactly. Diversify your portfolio,
Yeah.
do your research, and stay informed.
Solid advice.
Mm,
Any final thoughts before we wrap up this deep dive?
yes. I'd like to leave you with a thought-provoking question. With all these factors at play shrinking, supply the power of those institutional investors, yet some headwinds like ETF outflows and the ever-present risk of liquidations, what does the rest of 2025 realistically hold for Bitcoin? Will this bull run keep charging ahead, or should we be bracing for a correction? And how might global events like that U.S.-China trade war we talked about actually play into this whole crypto drama?
That's the million-dollar question, isn't it? It feels like we've laid out all the ingredients, but we're still waiting to see how this Bitcoin souffle is going to rise or potentially fall. Those predictions of $160,000 or even $180,000, are they even remotely realistic given everything we've just discussed?
It's certainly possible, but remember, predictions are just that educated guesses based on current data and trends. The crypto market is notoriously volatile, and unforeseen events can quickly change the game. That's why it's crucial to focus on understanding the underlying dynamics rather than getting caught up in hike cycles or overly optimistic forecasts.
So how should someone approach those price predictions? What questions should they be asking themselves to evaluate whether those numbers are even remotely achievable?
Here's a framework to consider. First, look at the source of the prediction. Is it coming from a reputable analyst with a track record of accuracy? Or is it from someone with a vested interest in pushing a particular narrative? Second, examine the assumptions underlying the prediction. Are they realistic, given the current market conditions and broader economic outlook? Third, consider the potential risks and headwinds that could derail even the most optimistic forecasts. Remember, the crypto market is still relatively young and prone to significant volatility.
That's a helpful way to think about it. So instead of blindly accepting those predictions, we need to apply some critical thinking, look at the track record of the people making them, and really dig into the assumptions behind those big numbers.
Exactly. It's about being informed and discerning, and that's what makes navigating the crypto space both challenging and exciting. It's a constant process of learning, adapting, and staying ahead of the curve.
Well, I think we've certainly covered a lot of ground in this deep dive. We've explored the dynamics of Bitcoin's shrinking supply, the growing influence of institutional investors, the potential impact of global events, and the ever-present risks that come with this volatile market. It's been quite a journey.
It has indeed, and I hope our listeners come away from this deep dive with a deeper understanding of the forces shaping the future of Bitcoin.
I think they will. So as we resurface from this deep dive into the heart of the Bitcoin supply shock, what's the key takeaway you want to leave our listeners with today?
Remember, knowledge is your most powerful tool in navigating the crypto world. Stay curious, keep learning, and always approach this space with a healthy balance of optimism and caution.
And with that sage advice, I think it's time for us to wrap up this deep dive. Thanks for joining us on this journey into the fascinating world of Bitcoin.
It's always a pleasure to share these insights. Until next time.